I recommend everybody who ever wants to like do a startup. If you don't already come from the world of startups, you should watch this. It's something I think I've watched 3-4 times in totality. And उसमें हर episode का नाम 40-minute lectures होते थे by one founder, and it was very directed. Like you would take one part of a startup journey, which is how to get PMF, how to release a product, how to build MVP, and that is how I sort of designed all my first, I think 20-25 episodes were very topical.
I think podcasting for me was a mindset gym, like I said. The way I did my first episode, while I was just hearing to ask the next question, it's transformed me as a human being, as a better person in these 8 months. Like I listen to actually understand. While I'm interviewing, I'm learning.
100%. Yeah. I often say that our mind processing power also becomes so much more faster, right? Because we have to understand what the other person is saying, process it, figure out what the next question will be while being able to summarize what the other person said. So much of what startups do is do things for the first time, and that can't happen if you already consider कि ये तो नहीं हो सकता. Just have to try. Like somebody has to go ahead and attempt building an Airbnb, right? Like if you considered that nobody would keep strangers at their home even if that meant extra money, that's what everybody thought. Airbnb made that the norm. Now it's like second nature. Yeah. The best exercise I like to think is, and anybody watching should think about it. The next time you go into a mall, think every shop will get replaced by a new age company. So your H&M will get replaced by, let's say, a New Me. Punish has gotten replaced by a Bluestone or like a Carrot Lane. Your Decathlon will get replaced by an Indian company that does that. Across Fintech, we have the largest outcomes if you think about it. PhonePe, Cred, Grow, Zerodha, all some of the largest companies in the country. Because
startup success का secret sauce है क्या? Is it the team, timing, storytelling?
It's the founders. Yeah. I think founders are behind everything. Founders have to be nimble enough to pivot if needed. They have to keep at it. They have to be relentless. They have to persevere through tough times. They have to sell and get a team. They have to do the impossible. Great teams always win. And the founders who are at it will almost inevitably win.
How often do we listen to the stories of the storytellers? No big brands backing them, no studio, no production house, just relentless prep, a love for the craft, and a belief that India's startup ecosystem needs to be told well. While everyone was chasing unicorns, he was chasing understanding. While everyone was building pitch decks, he was building meaningful connections. Hi and welcome to Venture Voices with Muskan. Today we have Mr. Jivraj Singh Sachar on the show, the founder of Indian Silicon Valley. Today we decode the world of podcasting, venture capital, and the art of deep conversations. Jivraj, welcome to the show. I'm so excited you're here.
So glad to be here. Thank you so much, Muskan, for having me.
So, Jivraj, being in the startup ecosystem, in the podcasting industry, and in the creator economy, we have tons of questions for you to guide us on. And you often talk about the importance of the words curiosity and the importance of asking why. What was your own why before starting Indian Silicon Valley?
Interesting. So I come from Calcutta, studied commerce, and I was on my way to do a trading job in the pure world of finance. Before I realized that going and sitting just in front of a desk was not for me. And through college, I tried multiple different things. Some worked, some didn't work. I tried an Instagram blog page. I tried to start multiple societies in college. And that was my way to sort of fiddle with entrepreneurship. But then I tried to build a company. And turns out commerce education does not prepare you to build a tech company, right? So I was like, Acha, I don't know how to build one. I spent 6-8 months on it. Didn't go anywhere. It was a tough ride. And that was perhaps the most challenging times when even though I was trying, nothing was working. And then I was like, okay, there must be many people like me who are giving it a shot, but are not being able to succeed because of whatever reason, right? And I was like, to them, who is answering questions? Because if you're not surrounded by great people, you probably don't have a network. And back then, I didn't know anybody. Like the norm in Calcutta is that you either work in a family business or you are doing CA or some of the other additional courses alongside your job, alongside your studying as well. I also, in fact, did FRM, 2 levels of CFA, but none of which I use in my day-to-day job today, by the way. So I realized no network, a lot of curiosity, a lot of questions, and a failed startup later. I was like, okay, it seems like to learn from people, I'll have to go and reach out to them myself. And that's how the podcast began. That's how Indian Silicon Valley happened. I was like, hey, there are more people like me who are not in a Bangalore, Delhi, Bombay. They have the same questions. And we were reaching a point where if I can learn from somebody else's mistake, that just saves me a lot of time, effort, confidence, right? So I was like, okay, I'll go and learn from people. It was supposed to be a 6 month experiment back in the end of 2020. I was like, कि 6 महीने करेंगे and we'll figure out कैसा जाता है and then I'll move on to my next thing. But turns out back then not many podcasts existed. A lot of people were freer because COVID was there, which meant you had the entire day to yourself, and even beyond working hours, you were available on sort of digital medium across, Google Meet or Zoom, and I was able to convince them to sort of talk to me. And yeah, I think I've never looked back since. I just enjoy so much of what I get to do on the podcast. It's sort of transformed my entire career trajectory from my job at AngelList to starting to invest. All of that in some shape or form can be attributed to the podcast. So I got lucky on that front, but it all started because I tried to build, couldn't, and then realized that there are more people like me. And so I was like, ki, kar lete hain podcast, why not? It didn't feel, I do think it's much like entrepreneurship. Sometimes you can't overthink it, right? If you over rationalize, at that time, nobody was doing a podcast, I would have probably counted it off. There's no tangible reason for me to do it. I thankfully didn't have any aspiration to also become like a creator or anything, right? Which would have, I think, maligned how I sort of approached the podcast. But yeah, it sort of worked out well.
Perfect. So you spotted a need gap.
Yes.
And to finally hitting publish on 16th August 2020, what went behind the minds of a 21-year-old before and after launching your very first episode?
I'm very good with dates, and these dates are so special to me. But honestly, it was very little understanding of the world of podcasting, and just I thought of it as an academic project. I was like, hey, I have to learn. I have questions, and I'm going to do this very diligently, which meant I actually recorded 10 episodes. Yeah. In hindsight, I shouldn't have because I was like, कि I was not getting real time feedback, right? मैंने 10 episode record तो कर लिए, but it was all in my head. But most of the prep actually looked like going through other videos, right? So I saw Y Combinator's 20 episode series at Stanford, which is the 2014 How to Start a Startup. I recommend everybody who ever wants to like do a startup, if you don't already come from the world of startups, you should watch this. It's something I think I've watched 3-4 times in totality. एंड उसमें हर एपिसोड का नाम 40-minute lectures होते थे by one founder, and it was very directed. Like you would take one part of a startup journey, which is how to get PMF, how to release a product, how to build MVP, and that is how I sort of designed all my first, I think, 20-25 episodes were very topical. We'll take one topic, we'll break it down with somebody who is very good at it. So I was very thorough from a depth of conversation lens, subject matter, and whom to get. I think some of the decisions I took right were depth, not compromising on quality of guests, and just being super ambitious with it. I wouldn't let anybody tell me that this is not possible. In hindsight, what could I have done better is, to be honest, start short form and then build on long form. I didn't know better. I think I never approached it from a lens of what content will do well. I always approached it from a lens that, hey, this is the needed content for people like me, whom I like to call future founders. I want to start a company in the future. I want to learn from people who are already out there, how they build their companies. That's the problem statement. In hindsight, I got the name right also. The name is a double-edged sword. Some people, of course, say that why don't we have India's only like India-centric name hona chahiye, why we copied Silicon Valley, but I think that's very few. I was following Silicon Valley so much. I saw the show as well, which is like a parody on Silicon Valley. But I was like, hey, India is the next big thing. India is the center of new innovation. I combined Silicon Valley, a known phrase, to India, kept it broad enough. It gives me the flexibility to date to sort of host anybody and everybody from the broad business world of India, as opposed to being centric to, let's say, founders or investors or operators. At this point, I can host any and everybody from India's landscape and even beyond. By the way, in the middle, I started hosting some Silicon Valley folks who are native Indians, and it gives me that freedom. So I think, those that went into preps, just a rigorous sense of research on what other content within the world of founders exists in the US market, get it to India in a meaningful manner, contextualize it, ask very first principles questions. The other thing that I got right, and this was not by design, is just I didn't know any better. कभी कभी ये होता है, if you already know certain things, right? Like, so as an MBA student, it would be difficult for you to ask genuine questions to people who are wanting to do MBA. But somebody who's not done MBA will be just more curious, right? Because they don't already know something. When you know something, it's just difficult to keep curiosity alive. So that's also something I
Great. I think the entire startup ecosystem is grateful for you. 250 plus episodes,
Yes.
3,000 plus insightful question answers. I think we've gained a lot from your episodes. It's not just a business episode anymore. I think it's a journal for us now. So
I would like
thank
to
you.
think so.
It is, it is. Thank you. You spoke about the importance of short content as well.
Yeah.
So back then podcasting wasn't hot.
Yeah.
You could even release a podcast without a video.
Yeah.
Right? So now anybody and everybody is starting their own podcast. If you were to start in 2025, what would you do differently?
I would do what Ganesh has done. Ganesh of Think School. I think he sort of has done something really special. I have immense respect for Ganesh. And through my very dear friend Ayush, I've gotten a chance to know Ganesh even better. Uh, I think Ganesh got one thing very right, which is that here there's a gap in education, which is people want to learn, but nobody's making it entertaining, especially about business, right? Business geopolitics, and start making these 10 to 20-minute case studies on a bunch of subjects, right? So for 3-4 years, he's just done that, just pure headed, done great case studies on Netflix level documentaries. He now calls it. Production's gone up significantly in the last 1.5-2 years. So he got that right, and now built a great base of very loyal fans, right? Like people who really wait for his content, they wait for the learning from it. And now he's built trust, which he's leveraging on the podcast. And I think he doesn't do the podcast very, very actively, but now he has more emphasis on it. There's a couple of episodes every month. He's hosted some of the best people. We sometimes exchange guests now. He's great at it, right? So I think, and his understanding of business is also very sharp, purely because of what he's done. In my opinion, he is the sort of best podcaster in the country. I think he's deeper than the other people who are more commercial in nature, and he can attract. He has a great audience, right? So I think the audience mix is what, if I had to do again, I would do, because I didn't have a base of audience to back on top of. That I should have done better, but that's an evolving journey. I think what I got right purely by doing podcasts is just loyalty basis a small niche as well, right? So people who watch, like let's say some of my first 50 episodes as well, continue to watch my podcast purely because they've seen the growth, involvement, and it delivers every time. It's not stagnated. So I think that advantage exists, and maybe quality of audience is higher. You could argue that somebody who watches a case study may not be as relevant for like a podcast, right? Like in correlation terms, but I still think he has an immense amount of wedge, and I think that's the exact formula to, I think, crack a podcast well in the short form world. If I had to do it all over again, I'd do that.
Right. And also audio podcast, I think, builds loyal fan base and video
Right.
helps you get reach.
Audio that way is very engaging as a mechanism when you're immersed yourself in a audio has more completion, so that's there. Two, audio mechanisms are more connected. Most people who have heard me on an audio mechanism always, they frequently mention that they feel more connected to the host than they feel when they're watching a video, which is actually strange because I'd imagine that watching somebody makes you sort of closer. But I think some of these bits from an audio lens have helped me. But thankfully, the other bit is I don't think people realize that the podcast is not the only thing I do, which means there's luxury in saying that even if I don't get an X amount of eyeballs and I get, let's say, less than X, I still like do well in life, right? Because I have something else to bank on top of, which is my investing journey, and I had a job back then. So thankfully, it's also a double-edged sword, by the way. Maybe if I didn't have anything else, I would focus solely on the podcast, it'd be bigger than it is. But the fact that I have the luxury to say that I'm not chasing views gives me a lot of contentment in saying that I'll do the best quality work, even if I have less amount of listeners, that's fine. But the kind of listeners I have and the quality they derive from my show is going to be paramount. And within that spectrum, I like to believe that, like any guest in the country, I can probably host them as good as the biggest podcaster in the country, if not better, right? And if I'm doing that, then that's a job well done. So knowing that is also important, right? It's important to know what game you're playing, and for me, it was that I want to do this well. I don't necessarily want to do it for the views, and I think that works.
No, definitely yours is quality over quantity, and
Yeah.
that's definitely, we can see that very evidently. But still, it's still India's top business podcast channel.
Yeah.
And So, coming to the most asked question, right? How did you manage to find your early guests?
Yeah.
I mean, then hosting those guests to following up and getting them on the show to now hosting Sanjeev Bikhchandani and Nitin Kamath. How did you do it all?
No, I think guest curation's been a combination of relentless effort, ambition, and just a sense of delusion, right? Like I was never afraid to write to somebody. I still am not. And I continuously say, I said it, I think a year back also. In some point, I'll host Sundar Pichai. I just have to keep at it, right? I think it's a matter of not if it will happen, but when it will happen. And if I can't even think it, can't even write to them, it'll probably never happen. You have to know why somebody will come out to the show, right? When I actually hosted Sanjeev Chandani as well, this channel was not very big, but I was just bold enough to write to him, and he was kind enough to agree because I gave him a clear ask. So all of these business professionals check their inbox, right? Because that's where business works, which means you can deliver to them a message. Now it depends what is the message and how truthful will you be. So in that message, can you concisely describe why you need that time and how will it benefit them and how will it benefit you, right? So that's the clear ask. And then it's about just reaching out to the best people. And the good part is people don't realize that I can 99 people can say no to my podcast, but I need the one, right? I needed one every week. There were enough and more companies. I was like, I'm in no rush. So even when I engage with somebody today, it could be an email, a WhatsApp, even an in-person meeting. Even if they're saying today it's not possible for whatever reason for them to be on the show, in a year it might be, in 2 years it might be. I'm in it for the long run. I think I love talking so much and learning about businesses so much that I'm just going to do this until I get significantly bored, which will not happen anytime soon for sure. So you keep a open mind, you be bold, and if you're ambitious enough, I think most things work out. Of course, having said that, you have to back it up with real substance, which means that hey, I would be very confident in saying that hey, you will have a very unique conversation with me. I would go to the extent of sharing questions and sharing this is exactly what I want to ask you, which will help you explore a different side of you as well. Like very often, I say that my North Star as a podcast guest is to help you think out loud. So if you are helping a successful person think out loud, you have done them a favor by helping them explore different dimensions of their thought, right? And if they're thinking out loud, it means they're not giving me a rehearsed answer. They are giving me something new. And they are being their raw, authentic self, which is where the best learnings can come from. And if I've done that, then they will also, in 1 hour spent, have derived a lot from it, hopefully, because they've had an active conversation. And probably, hopefully, does not cost them too much time, energy, whatnot, right? So that was there. And also, when I started, since it was mostly on Zoom, I was literally asking for just like half an hour, 1 hour. So I think sometimes people just tend to agree. But I think what most people get wrong is not just like shooting that shot, right? And not writing that email. I think that's the biggest mistake. If you write that email and then you get shot on, that's fine. But if you not even tried, that's wrong, right? So I think you try enough, you do a couple of good ones, some amount of luck here and there works for you, and then it's a good loop that starts. And now, I mean, Nitin took me about like 2 years to get on the show. So, I mean, it happens every now and then, while some others just happen very serendipitously now, right? Like I was sitting with somebody today at breakfast and he corrected me to a big CEO and probably host him. But this happened purely out of luck, right? I didn't have to make the effort. Some of the things, like when they compound, you can see the results later. But yeah, if you're starting a podcast today, just write to the biggest people and see what they say, do the good work, and hopefully they'll see that and eventually come back to you.
Rephrasing your own line. If you never tried, you will never know.
100%. I love that phrase. It's true for most things in life, actually, not just podcasting. You just have to give it a shot every now and then and see where it goes.
Like brands struggle to find their PMF, right? When did you get the sense of validation that it's not just a podcast now, it's going to be big?
It took me some time. I think a year and a half into the journey, when people started to acknowledge that, hey, like in a room, when they would hear, okay, you're the Jivraj who runs Indian Silicon Valley, because, okay, I was not visible back then, it was audio only. Then it started to sort of make sense that, okay, true PMF is customer love, right? Customer love and customer repeatability. what does that look like for a podcast? It's people acknowledging that you've done a great show and them wanting more guests, more conversations on your show. And when that feedback started to come, right, like every now and then a LinkedIn message, somebody on Instagram reaching out and saying that, okay, you've done a good job, the guests themselves acknowledging that, hey, you're different, you do a conversation which is unique, you don't ask the same questions. All those were confidence pointers that made me keep at it. But I think one of these times, and I think one of my episodes, I think in video it was, I think one what Pratham actually did really well. That was my first video conversation in 23. That was the first time when it felt like, okay, video can also scale, right?
That was your first video podcast?
Yes.
With
My
Pratham?
first, yes, it was with Pratham after a good 150 conversations. So I didn't do video until 2 years, first 2.5 years actually, maybe more. And then I recorded with Pratham. And this is back, by the way, when there was a third cohort was graduating. I think the fourth cohort was coming. You guys are fifth, right?
Fifth.
So it was very interesting time to also meet Pratham. He's been really supportive of what I do, and I'm very grateful. So, but that did well. And he actually, after the pod said that, hey, you do a really good show. Why don't you just like do all video content? That was my first video podcast. So he said this, and I'm like, yeah, I've always wanted to. But I was back then not in, let's say, Delhi or Bangalore. I used to shuffle between Bangalore and Calcutta. So I'm like, okay, this makes sense. I'll start doing more of it. And that's when sort of it took a great journey. But most of, I think my motivation, and I like to think for people also should be internal. I think some of these things are not, you can point to some data, maybe one conversation going viral. My Akash Anand episode did really well. Sanjeev Bichchandani episode did really well. This happened towards the end of 23 and early 24. And then once that happened, I knew that I just have to keep at it. But even before that, I knew that I'm doing something unique. People don't realize that doing unique things have immense value. Like unique things may not like, I don't know, I'm doing, for instance, right now, a startup board game, right? It will not sell a lot, right? How many people like startups? Then how many people like board games? The intersection small, but it's still pretty unique, right? Like, why has nobody else done it? But I get to do it, and I'm like super excited about that project purely because it's unique, it's fun. I know enough people, and I have some distribution. I'll be able to. I'm not doing it for the. I'm not
Monetizing.
making it a kids toys company or like a toy company. I'm just doing it because it's a uniquely interesting thing that I am poised to do. And there's a lot of merit in doing some of these things, right? People don't realize how then it plays back, right? Like doing the podcast is not just how good the podcast does. For me, it's the network effects of having started a fund on top of it. So those are important things to also look at.
Right. But as a young creator back then, when
Yeah.
you were doing audio podcasts, there would be a lot of times that you might have felt imposter syndrome. Like I
Yeah.
still feel it at times.
Yeah.
At an event, at a dinner conversation, I still feel that I maybe do not belong here. Do you still feel it today, or it was just back then?
In podcasting, not really. Like, I think in podcasting, I feel extremely confident that I'm one of the best out there. So I think I've stopped feeling that. And a lot of imposter syndrome gets solved when you earn confidence, right? Like with every new conversation, when I know I've delivered great value, I think confidence just accrues itself. In some other things, yes. Like, I don't know, I'm starting a fund as a 26-year-old, which is a sizable corpus, around 20 million. And maybe sometimes, like the 5% times, there's imposter syndrome. Am I ready? Or should I be doing this? But to that, I think people are never ready. Like I was talking to yesterday only, it's funny. Yesterday, I was talking to somebody from New York and he started a fund as well. And we were discussing that we back as venture capital investors founders who are on a trajectory for the first time, right? The Zepto founders have built Zepto for the first time. They were not ready for this. So if they can do that, I can start a 20 million fund. I'll do it for the first time, but I'll give it my best. Nobody's ever ready for anything, actually, if you think about it. The most founders do their first company for the first time. Most jobs are done for the first time. Nobody's ever ready for what they are actually doing or where they want to get to. But starting gets you ready. So I think imposter syndrome is about earning confidence and being okay in your skin that you've done a great job and you will put in your all. It's about the input, not the output. And I think I've also been very blessed to have a lot of support around me. I think the additional benefit that a podcast gives you in life is just great connections, meaningful ones, right, in life. And these are not I think network is a very tangibly transactional word, but I just found great friends. I mean, today morning I was sitting with again a founder, and I met him through the podcast, and we were just having breakfast, and we were sitting down. We spoke for like 2 hours, and that would not happen like in many other situations. And I couldn't have like thought about it when I started. When I started, it was very clear that okay, I just want to learn, but now it's about so much more. So yeah, I think earn your confidence in whatever you do and dream big, then the execution will not feel imposter first.
Right. I think podcasting for me was a mindset gym, like I
Yeah.
said. The way I did my first episode, while I was just hearing to ask the next question, it's transformed me as a human being, as a better person
Absolutely.
in these 8 months. Like I
100%.
listen to actually understand. While I'm interviewing, I'm learning. Right?
100%. Yeah, yeah. I often say that our mind processing power also becomes so much more faster, right? Because we have to understand what the other person is saying, process it, figure out what the next question will be while being able to summarize what the other person said, connect the dots between the other conversations I've had to be able to reference something interesting. And so the processing speed is just way faster. And the additional things that people don't see, like people usually see only the 1 hour, 2 hour of podcast that gets recorded, right? But the fact that I think the I think I've not done a great job at it, and with GPT or research is now way more easier in life. But I remember I would sometimes spend like 2, 3 days behind one podcast conversation just learning about businesses.
Yeah.
So I mean, that by itself, like people don't understand, but a podcast gives you this virtuous cycle. You research, which means you're learning. You then talk, which means you're learning again, but your conversational skills are improving. Then you have feedback from your listeners, right? Which means how you've done, what you've done right, wrong, from your own self. And then you get to iterate on top of this, which means this is a great learning loop, a great iterative loop to conversations. Like I'm very passionate about that subject as well. You just like transform your entire self. I couldn't agree more. I think I often sometimes say that everybody should start a podcast once. I know people say that I don't know it's overdone, etc. And don't do it for the wrong reasons, of course. But if you start it once, you host a couple of guests, you learn so much about just little things, and it's invaluable. I think some of these learnings are for life.
True. Earlier, the conversations used to be on surface levels, but
Yeah.
now when you're in a conversation, you yourself feel that there's substance to it now. It transforms you as a human being, truly. But Jivraj, most of the Indian podcasts, they don't fail because of bad content. They fail because of inconsistency.
Yes.
How do one battle that? I mean, they are failing after episode 10 mostly. So how do one battle that?
I think there was a good stat that I think 1 in 10 podcasts don't make it more than 9 episodes, and out of the ones that do, 1 in 21 more don't make it. Like after in that 9 to 21 also, 90% fail and only 10% survive. I think podcasts are just like tough, yeah, to keep up. I mean, people just start because it's funny, because it's glorified, because it feels like you'll be in front of camera. There's so much, like, think what you're selling, right? So as a product company, you sell a product. As a software company, you sell software. As a podcast, I'm actually buying time.
Buying time and selling myself.
Yeah, selling the content, but buying somebody's time, right? Like the currency that somebody else is paying is not money. They have to put in the time to actually listen to me, which means in time is the most valuable currency anybody has. Sometimes it's actually easier to pay 500 rupees for a sunscreen than it is to invest an hour to actually learn, right? And so that trade off is extremely challenging. And somebody has only a couple of hours for content consumption, which means you're fighting for mindshare. So if you start a podcast and you want it to be successful, and if you're not Ganesh, you will probably have to give it a lot of time so before it actually works. And so that's why you have to be thoughtful. I was just watching a conversation the newest podcast Naval has done is with this guy Chris Williamson or like Willickson, the British guy. It's a 3 hour podcast, but उसमें ना एक 10 minute का snippet है where he says that the things that require 4 5 hours 4 5 years of our time, let's say a job, undergrad, masters, we spend maybe a month to actually decide whether or not we should do it or where we should do it from. Like for your job, you'll probably like 2 3 months you'll spend, and you'll spend like 2 3 years in that job. That's not fair, right? If you're going to do something for a really long time, you should spend immense time to actually decide whether or not you want to do it, how well do you want to do it, what is the direction in which you want to do it. That gets me to the fact that, hey, people who want to start podcasts don't really think it through. Like, it's very surface level. They think that, okay, it'll do well, I'll host some random guest, but they don't consider what is the direction, why should somebody listen to you, why are you different, what is the unique value that you can provide. None of this is actually thought through in a very, very tangible manner. In fact, when I started, many people were starting podcasts back then because it was easy to start one. It still is, like it is with content, right? Which is a good and a bad thing. The good thing about being able to start anytime is it gives equal opportunity to all. The bad thing is that people who are opportunistic in the short run start and then forget about it. So I, in fact, know a bunch of people who were running podcasts when I was starting, but either shut it down, weren't consistent, and just like didn't do it. So long story short, I think if you do podcasts with fundamentally strong reasoning and you give it at least, in my opinion, at least a year, I think there's a good chance it will win. Like, people still ask that startup content is very cluttered, so many podcasts. I don't think so at all, by the way. I, in fact, wrote a brief post on it, which is that do take a typical, like, topical thing, start there, and then expand from them. So in Indian startups, we don't have content around AI content, very little content on specific industries, very little, like a fintech first podcast or a marketing first podcast or a HR first podcast, right? You either take a subject matter or a role, and I think that still makes for great content. You take a particular persona, start a podcast just for angel investors, start a podcast just for family offices, start a podcast just for failed founders, start a podcast just for second time founders, start a podcast just for unicorns, right? Of course, all of this have different nuances that you have to consider when you start. Like, why should you start? Will you be able to get the kind of guests? How are your conversations going to be different? All of that. But there's still plenty of space, right? Like, if I want to learn about angel investing in India, I don't have any space. If you really think about it, I will have to really search the internet to get information. Like, start a podcast that simplifies everything apart from running a company for founders, which is admin, which is legal, which is like finances, right? ये सारी चीजें कौन कर रहा है? बहुत कम लोग कर रहे हैं, right? So if you think about it, there are enough and plenty spaces, but you'll have to do the less glorified, long thing, and you'll have to keep at it. You can't just think of success from an instant standpoint, and then you have to really do it for the purpose of learning. If you do it for the artificial reasons of and just becoming famous, that doesn't happen, in my opinion.
What are the new trends of Indian content consumption patterns?
I think people really appreciate depth now. That was not the true early on. I mean, I think people, when it's like true for any ecosystem, right? तो पहले सारी चीजें dump होती है, which means horizontal information always wins. That's how horizontal products also always win. And then vertical start to form, because within the horizontal, अगर 100 लोग कोई general चीज consume कर रहे हैं, तो उसमें से 20 लोग ऐसे होते हैं who want to learn about something in a specific manner, right? So let's say a room of 100 students all want to learn about the Indian startup ecosystem, but out of those, 20 people who are already learned about the new startup ecosystem want to learn about specific things better. Somebody wants to learn venture capital, somebody wants to learn operating in startups. Like, a lot of you will also apply for like chief of staff roles. If you want to understand what a chief of staff role is, again, there's very little. Like, very often I say that if I had to start a second podcast, I'll only do a podcast with non-founders, right? Like, really get like a chief of staff, head of marketing, head of sales, head of tech, and talk to them. Like, really understand. Because think about it, there are 100 unicorns, which means there are 100 founders who built unicorns, but there are 90,000, a lakh people who actually work in those unicorns. Now, who is giving content for them? Not everybody will become out of those 90,000 a founder, right? Some of them will go on to building another company and operating in other companies. Who is upskilling them? Like, very little content for them, right? Like, who is the marketing person at Zomato? वो किससे सीखा है? Like, think about it that way. For that domain, for their specific job role, I think it's still a very good space. Like, why not just do it? So yeah, I think consumption wise, people appreciate depth. People come to podcasts to actually learn. A lot of people I know have substituted their Netflix subscription with YouTube premium subscriptions. A lot of gym time consumption has been replaced from music to, let's say, podcasts. A lot of travel time consumption has been replaced from music to podcasts. Podcasts are looked at a very tangible source of learning. And within that, if you can provide immense value, I think there is a great audience for that, irrespective of the field, like financial markets as well, right? Like, let's say, I don't know, public markets as well. Somebody starts a podcast only for like public markets, right? Talk to public market founders, managers, a couple of people are doing that. But how can you do it even better? A career related podcast that breaks down like which career should you go for and why, right? I think there is space for every. The more horizontal you go, the more you have to fight for mindshare. If I give you a specific thing that this podcast talks about venture capital by hosting a lot of these VC fund managers, that's specific. But if I talk about okay, Indian Silicon Valley, which is I host founders, investors, and operators, that's more broad. So I have to fight for greater mindshare. But I can do that now because I've maybe built credibility over a period of time. If you're starting, start with a specific thing, and then you can work your way forward because there is audience for specific content.
Right. I think I've given a lot of podcasting ideas,
Yeah,
a lot
yeah.
of niches for
I I in fact I'm happy to like I'm talking to a friend to help him just start one of these because it just makes good sense, right? Like you can pick genres as well from a do a 20-minute show, do a 30-minute show. One thing I've been considering is doing one episode a month, which is just 20-25 minutes, right? And talk to a specific persona as opposed to, and that'll be something different. So there are multiple things to do. Depends upon how curious you are, why you're doing it, all of that. But it's not like there's a dearth of opportunity.
right. I think for everyone who says that startup market or startup podcasting is a lot of clutter now, I think it's a good answer to them.
Yeah.
Besides being a great podcaster, you have spoken to thousands of founders till date, and you yourself are the general partner of ISV Capital. What do you think VCs are actually looking for in founders in today's day? What's the signal for them?
So we're at a very interesting point in Indian startups where the first level of companies have been built. So people who took risk, who got capital, and were bold enough somehow executed and figured out scale, right? Because India was very starved from an innovation standpoint. But now you need to be more seasoned from an insight lens. So when you come to a venture capital investor as a founder, your insight need to be they need to be very very deep. If your insights are non-deep, they are on the surface, nobody will fund you, right? So deep insights, the way I frame it is, can you tell me something I don't already know about an industry? Because as an investor, I will read about a particular space, right? Let's say you want to do dog food. I can understand, okay, pet ownership is rising. There's a gate 10 in the US, there are 7 8 pet food companies that are doing well. So in India also, given the trends, given that incomes are rising amongst new age India, people are getting married later, companionship means a lot of pet ownership, this graph is rising, there's a need. But I also know that. So what can you tell me differently? And that difference as a founder will only come if you've done a lot of like primary research or whatever. Primary research is the formal way of calling it, but go and talk to your customer. Talk to your customer, understand your industry, and give me insights that I don't already know. That's hash one. Second is a strong right to win. In my opinion, like why will you win? Right? There are so many founders building in spaces. Everybody's what Shark Tank wants to be a founder now, which is great. But tell me why you are different. Why you will win? If you built in e-commerce before, maybe you can build another brand today, right? Even if you've not built, maybe your insights are so sharp. You've gotten products so right. You've gotten design so right that you will win. So give me a right to win, right? Like why are you the person to back, right? That's the next important thing. And then the third is just your ability to, a lot of startup building is just selling, right? Like you sell to investors, you sell to your team, you sell to the market. You're almost always convincing people of your vision. So are you like strong headed from a confidence standpoint, but of course, not very strong headed when it comes to feedback. Uh, do you actually have the confidence to build? Are you ambitious enough? Are you different, right? Like, I mean, I love founders and it's almost evident, I think in the first interaction, if I don't feel like this person will do something special in life, irrespective of what they do, I think that's a no go, right? And a lot of times it's visible. You talk to somebody and they're just clear. They're clear about what they want to do. They're ambitious. They know that irrespective of who backs them, they'll just keep at it. They're relentless. Their insights are sharp. And they can point out to very clear thinking about an opportunity. I think when all of this matches, I think it wins. And of course, then you have to calibrate some markets versus the other, right? Like maybe pet is not a very large market right now, and maybe this is not the time to back it. maybe in 2 years that changes. Maybe this is the time. That's where you calibrate as an investor. But as a founder, you really need to be super sharp in showcasing some of these traits, and then the rest follows.
What are the traits of a great investor in terms of clarity, conviction, and founder empathy?
I think great investors are those who are very clear in terms of what they are looking and very iterative about the fact that when they go wrong, they are okay to accept that and change their philosophy, right? So much of investing is you take a bet basis, facts you know, and you don't know, which is a lot of unknown unknowns, right? Ki I can calibrate that this, again with the same example, this founder will do good in pet food, but 6 months later, maybe the design didn't work, maybe the founder was slow to execute, and so that's new information to me. So I have to, basis my thinking, recalibrate. I thought this is how execution played out. Where was I wrong? Can I change my philosophy? If you do this long enough, you feel you have a very strong belief of what works, what does not. And that framework, not belief, that framework is what will win. And then you have to update that framework based on new information, not just with founders, but trends, right? So with AI, you have to like educate yourself and be ahead of the market. So much of what you're doing again as an investor is taking a bet on people and markets. So the market thinking is the other bit that you have to be really, really clear. And then investors need to realize that they're not the ones running the boat, right? So you have to not be taking charge. You have to listen to founders. You have to chime in when necessary, but not be pushy. Like, I think all of those things are very hygiene first. But an investor's role is to give you money and to help you in ways that you cannot help yourself. So maybe expand your thinking as a founder, right? Give you access to information from the market that you are not privy to because you are centered to building the company, and give you the capital. Anything above and beyond, if you credit yourself, if you think of yourself as bigger, that will not help as a investor. And I have the pleasure of hosting some great ones, learn from them. And also what I try to do as an investor myself is just be available to my founders, be fast, be very clear in communicating to them if I can help or not. In the process of diligence, also set expectations very clearly and get, yeah, some of these basics. If they are right, then it's about who you are, right? Like if you're fundamentally like genuinely supportive, you give them feedback not to impress them but to actually help them. If all of those things stand, you'll be a good investor. Venture capital is a learnable skill, especially early stage, but as you go further, you have to of course develop thicker skin. If you've seen one cycle, you'll be able to help them better. So much of being an investor is just gathering a lot of information, condensing that, and helping your founder win in some shape or form. So if you can do that, that will inevitably work.
Right. And are we still romanticizing founder market fit, or is it still the most crucial thing?
Founder market fit is more important now than it was earlier, because earlier, even if you weren't from a particular space and you were bold enough, you could build in it, right? But now, let's say today somebody is building a, what's a good example? Let's say B2B marketplace and they already come from Zwork, or they're building a consumer marketplace and they come from Zomato. That's a better thing than, let's say, an undergrad from XYZ place, right? Because this marketplace experience, being at Zomato's, looking at scale, having the resource, seeing a lot of what's happened right and wrong, gives you a lot of experience as an operator. So that founder in a marketplace model, consumer marketplace, in theory will win than the other one. But that founder, of course, can have better insights, be more hustly, execute better. So you have to then calibrate. But I think founder market fit is extremely important. And it's one of the things, it's just a better way to say that their insights are better. If you're from an industry, you'll probably just know more about it, right? And so that will make your insights sharper. Knowing more also is, by the way, a double-edged sword. Like sometimes when you know more, you're privy to too much information on what can happen. Most startups actually achieve what cannot happen. So much of what startups do is do things for the first time. And that can't happen if you already consider कि ये तो नहीं हो सकता. You just have to try. Like somebody has to go ahead and attempt building an Airbnb, right? Like if you considered that nobody would keep strangers at their home, even if that meant extra money, that's what everybody thought. But Airbnb made that the norm. Now it's like second nature. Yeah, you can welcome somebody else into your home as an extra who has an extra bed and just make money from it. But before Airbnb, that was not the norm. So most great startups will actually change the norm. So you can't consider कि ये तो नहीं हो सकता. It will happen. In fact, so much of being a founder is about imagining how the future will look and make it a reality. It may not be true in theory today, but that's what you have to realize. Like, in fact, I think Vinod Khosla, who's a legend in venture investing and as an operator, was mentioning that you have to be bold enough. Like, he talks about flying cars. In 2000, he was talking about AI. And today, he's talking about flying cars. So, I mean, he is willing to take that bold bet. In fact, one of the things he said recently on a podcast that I also wrote about is our willingness to fail is what defines our ability to succeed. So if you're not willing to fail and if you're risk averse because you spent 10 years at Zomato, that doesn't work. But if you've seen a good cycle, founder market fit is a way to say that are you suitable for your market? And if you've been at another company and you can still be bold, excited, confident, and approach a problem from first principles, you'll still win. Elon Musk built SpaceX not being a space engineer or whatever, right? So I mean it's the most technical company building a satellite, but like he built it from first principles. He's like he rethought physics. So if he can do it, and of course he's a legend, outlier, whatnot, right? Like so it's unfair to compare us to him. But since he's been able to put an example, there are other companies like Airbnb. India may be kafi hai. Urban company I really like, right? This never happened, right? Nobody thought that abhi to chalo 15-minute the house help situation is different. But back in 2014, getting a carpenter man talking to five people, calling him or her, not knowing when they will show up, not knowing if they'll have the tools, not knowing how much to pay, they just transformed it, right? Like, I mean, they have changed that entire game, approached it first principles. So yeah, long story short is founder market fit is important. And back then, by the way, Urban Company was built by ex-consultants. So it didn't require market fit. It just required a unique new insight because the market was very broad. But if you now want to do something, enter a white space, it probably helps if you have better experience.
Right. And according to you, what is an underrated trend or an overrated trend in the startup ecosystem?
From a company building perspective, where
Yes.
should I build? I think most trends are overrated in my opinion and underrated at the same time. I'll tell you what I mean. Like AI is a trend everybody's talking about, but very few AI companies being built out of India, right? So means you are overrating the impact of what will do to the customer, but underrating how startups are going to get built. The consumer trend is one which I think is grossly is spoken about a lot. So it's a bit overrated. Yet at the same time, I think the opportunity, like the best exercise I like to think is, and anybody watching should think about it. The next time you go into a mall, think every shop will get replaced by a new age company, right? So your H&M will get replaced by, let's say, a new me. Your Tanishq has gotten replaced by a Bluestone or like a Carrot Lane. Your Decathlon will get replaced by an Indian company that does that. If you go to a food court, right, like apart from the legacy, like let's say a KFC, Pizza Hut, you'll see a lot of new age sort of brands. Wow Momo, right? Every food court of every mall. How does that happen? So fundamentally, Indian consumers will not consume what they used to 20 years back, which means everything that you can think of. From the shoes I wear, to the jeans I had, to the t-shirts I wear, to the glasses that I have from Lenskart, everything will change. Some have already changed, so nobody is wearing like a Titan ka chashma anymore. Everybody has a Lenskart glasses, right? Everything else, I think it's a fundamental shift. So most trends, but don't follow trends in my opinion. Like the a trend by definition is a bus that you've missed. So you don't want to be on a trend. You want to play on a tailwind, which is a fancy word to say that the wave is going that way. So the health trend is very real, right? So I think underpenetrated people in India have realized that basic income is met. So now they want to understand how to build a better life for themselves. Now, better life does not necessarily mean indulgence. It means actually healthy living. You want to be old enough to play with your kids, to attend, to play with your grandkids. And so, in order to do that, you need to be healthy. And that means being able to live long enough, which means everything that's happening around the health wave, going to a gym, consuming the right products, keeping wellness at its core, nutraceuticals, everything is sort of like revolving around this major health trend, right? So, yeah, I'd say AI is the underpenetrated building trend that should be capitalized. I think I was giving this example. People use Make My Trip today to make bookings, right? But we won't be doing that like 5 years from today. I'll just be prompting an agent to sort of mention that I am four people. This is my mother's birthday. We want to go to this kind of a place. This is the kind of home we like to stay in or a hotel. And these are the number of days we're going for. And they will already have my past travel history. So they'll be able to make bookings. And in 5 minutes with all bookings, I'll have everything ready. I think who's building that, right? Somebody needs to build that out. Most of how we interact with like most consumer use cases will change. So somebody needs to build some of those use cases. That's at least what excites me as a investor. And when somebody is building some of these companies, I'm super curious to take a look and see if they're the right founders for it.
So in the next decade, in next 10 years, what's the next big thing you guys are betting on?
I think most of the things that I mentioned, but like fundamentally, every day to day activity will get replaced by a software or a service that is new age. And consumption will also be driven by new age things. So everything is up for change, right? The way we interact with banks, the way we interact with grocery stores has already changed. The way we shop, the way we consume OTT, right? Like Indian OTTs are becoming a thing. So fundamentally, pick any space that you are curious about. It could be fintech, it could be software, it could be B2B marketplaces, right? Like go and work in a factory and realize that factories are still very inefficient. So if there are changes within the factory, be it monitoring the factory to understand if there is less wastage on the factory floor, to hiring a blue collar workforce on a project level basis so that hiring is done in a decent manner, to making more automated machines, all of this will also change, right? So you pick any vertical. It could be manufacturing, it could be software, it could be fintech. Across fintech, we have the largest outcomes if you think about it. PhonePe, Cred, Grow, Zerodha, all some of the largest companies in the country, because how somebody will open a bank account, save, invest, deploy, fundamentally has changed, right? Like 15 years back, it was done manually, right? Like I would have to go and open a trading account. I would have to go and buy a bond. Deposit in like fixed deposit was not very bank like, right? But there's a company called Stable Money which has sort of changed that, right? FDs. So most things have changed, and I think I don't even remember most things that I would do as a 15-year-old versus what I'm doing as a 26-year-old. So think of all of those spaces and where disruption has not already happened, you need to do make it happen.
What do you think will happen to the relationship managers in wealth management firms, traditional wealth management firms?
I think they'll just become more efficient, right? Like for every sort of 10 clients, if you needed two relationship managers, you probably need less than that, right? So proportions will change. They'll be they'll be way smarter because we have now GPT that can ensure that delivery of information is not a problem, right? So pehle, what would a relationship manager do? So much would be to build trust, to convey information that was not already available, and to ensure that they are taken care of in many different ways. Most of these things have gotten automated. You still need a human person because when somebody is managing large sums of wealth, you need to be able to assure yourself that there's somebody there in times of crisis, but it'll not be as high touch. So I love companies like Deserve, Centricity. They've done an incredible job at being able to democratize wealth management. But yeah, I think the same wealth management firm which needed like 150, 200 people can now be built in like 50, 100 people, if not lesser. And that's the real moat, right? Like, how can you be more efficient, deliver better results? What does a customer want? They still want the same returns. So, while an old company can still give you the same returns, they won't be able to give you the same service. And that service, hopefully, a new age company can do better.
There's a lot of talk about first principle thinking. What do you think is happening in the Indian startups ecosystem in terms of first principles?
I think we're seeing a lot of companies which are not copycat models. And by the way, I don't think copycat models are bad. Like they are not exact copies. Like क्या होता है? Human behavior is fundamentally the same, right? Which means something that's happened in another geography, which is just advanced, has showcased a pattern in human behavior, which is that humans like premiumization. Humans like newer things that are more efficient. Humans want to shop in a more efficient manner. So Amazon happened in the US, which means that people realized that shopping online was just more convenient than going to the retail store. So there was an audience for it. Flipkart happened. Of course, Flipkart is based on the Amazon model, but that does not mean it's like a copycat of another model. It just means they're following the same trend that human behavior has already exhibited. So I don't think people completely realize when they say copycat models are wrong. It's not like a like to like copy anyway, right? Flipkart is very like the SKUs are different, the search model is different, how Flipkart lists you is different. So all of those are changes that you curate depending upon specific humans in that geography, right? So I think that's important to note. But first principles thinking is nothing but not assuming what is already true, right? So there is information that you already have that I know live commerce works, or like information that a particular bottle gets made a particular way, right? First principles is considering if you had to make the bottle from scratch, how would you, knowing nothing? That's simple, right? So, Urban Company is a good example. Pristine Care is a good example. Cars 24, Spinny is a good example. All of these companies are built on top of Indian insights, which is that his second-hand car ownership is necessary. It is a 3x more larger market than first-hand cars in India. That's something I didn't know, but I discovered. And so if you know that fact, and if you can drill down from first principles, अगर लोग इतनी खरीदते ही हैं second hand cars और उनके पास कोई efficient way नहीं है, so first principles thinking says that you build an efficient model. So that's what Spinning Cars 24 have done. They built a more efficient way to verify second hand cars. Instead of going to 5 dealers, you go to one dealer, which is Spinny the platform. That is trust, and you buy the car from that platform. And even if you have to sell, you don't have to go to 4 people, get quotes from all, then decide, then negotiate. You go to one, they give you the best price because they have a dealer network on the back, and they make it more efficient. Technology fundamentally makes human processes more efficient. And that's the job of technology. You, as a person, have to understand and process information as a founder and build the most efficient solution to a given problem. That's first principles thinking. And if you don't do it with any assumption, so keeping assumptions aside, there's a company called Battery Smart. Battery Smart is a company that takes batteries in electric vehicles, charges it from mom and pop shops, and then gets it back to you. This solution will never work in the US because people just prefer ownership of electric vehicles. In India, capex is difficult to get, right? Like not everybody can, like a person who drives an auto rickshaw can't sometimes just own an auto rickshaw, right? So they end up leasing it. It's not their vehicle, which means that the battery is more efficient if they don't already buy it, but they have to charge it. And so that's an interesting model that they have built. That is a very India first solution because charging of batteries through a substitution model has never worked in other geographies, but it's worked in India. So a lot of this is just like very fundamental, but a lot is happening in India from a first principles point of view. It's a great thinking mechanism. And even if you're bringing a trend into India, don't copy it like to like. As long as you can keep differentiation alive, that helps you. Copying it like to like will only hurt you, by the way, because behavior is same, but humans are different, which means preferences are different, and so you have to curate a solution basis the same behavior, but tweak it basis the preferences. So that's nuanced, but that's how I look at it.
There's a lot of content on how you can exactly replicate businesses outside in India, but there's a very different perspective from the lens of a VC that you just spoke about. What's the most misunderstood fact about VCs?
Two things. One is VCs don't pressure founders, or at least like I like to think they don't. I have, in full disclosure, not come across folks who do. So that's my perspective. Because realize that VC's ka interest with the founder is directly aligned. If you don't do well as a company, then the VC does not make money anyway, right? So VCs will not ask you to do anything that is impractical, in my opinion, because their interest is directly aligned with yours. People forget. However, of course, there are enough stories out there which tell you that VCs have asked you to be aggressive or do things which may not be in the interest of a company because they don't have full context. But they are not running the company day to day, right? Which means that the VC does not has full context. So sometimes the learning can be theoretical, and when applied in a non-contextual place, it can be detrimental. So bad cases. But media always will highlight the wrongful cases. I think there are enough good venture investors who have great relationships with their founders, where both parties are very happy. And I think that's one thing that the people at large don't understand. And I think the second thing is just of venture backed companies, people don't understand losses very well. I think when we keep hearing that, this company has made losses, company should not make losses, business does not get built on the back of losses, I think that's again a very stretched narrative. I think people need to understand that companies which are venture backed don't make losses indefinitely. They make losses in the moment and substitute that for growth. Because once you have grown, you can then make a lot of profit, which has been true in the case of Zomato, Airbnb, many stories. So it's a replacement. It's not necessarily that I can't be profitable as a startup, which is venture back. Is that I choose to not be profitable today because I want to grow today instead of being profitable. Because if I remain profitable, I starve growth, which I don't want to do. Because if I'm starving growth, somebody else will overtake. Currently, I have to win market share. Once I have won market share, then I can positively grow my economics as well, because then I have enough of a customer base, enough of brand love, trust, whatnot, right? That I can be profitable. That I think is also not very well understood within the broad masses, in my opinion. And we keep hearing these headlines which showcase losses, but I think it's a false measure, because as long as a company is private, yes, a public company should show profit, you should understand. But if a company is private, the reason they are private is because they are figuring out how to go public and when to go public, right? Which means what they do with their capital should be a discretionary choice. And they choose to prioritize growth as opposed to profit, which is absolutely okay. If I have 100 rupees today, I can either apply that 100 to grow or to make profits. If I don't grow, somebody else takes me over and I become a 50 rupee company. But if I do grow, once I'm 200, then I can be positive economics as well. So people don't fundamentally understand the trade-off. People think it's a point in time. ये binary नहीं होता कि profitable आज नहीं है तो कभी भी नहीं होगी. They can always be profitable in the future.
तो स्टार्टअप सक्सेस का सीक्रेट सॉस है क्या? इज इट द टीम, टाइमिंग, स्टोरी टेलिंग?
It's the founders. Yeah. I think founders are behind everything. Founders have to be nimble enough to pivot if needed. They have to keep at it. They have to be relentless. They have to persevere through tough times. They have to sell and get a team. They have to do the impossible. um, Great teams always win, and the founders who are at it will almost inevitably win. Of course, markets have a role, other things, timing has a big role. I don't think timing gets spoken of enough, but you can't game it also, right? Sometimes survival assures timing. Like Zerodha just survived to 2008 to 2016. Demonetization happened, played a major role. UPI happened, played a major role. COVID happened, played a major role. So, but you couldn't have, nobody in the world perceived COVID, nobody knew about demonetization. So you could have timed some of these things, right? But yeah, fundamental trends, could you have timed key? I don't know, internet penetration in India will go up, mobile phone penetration in India will go up, people will have more discretionary spend. These are just broad, very macro levers, but you can't still time them. Sometimes you're not there, right? Like maybe premiumization is happening today, but building a luxury brand is just difficult today. Maybe in 5 years, when Indians have more wealth, building a luxury brand will be easier. Maybe start an India like brand then, right? Which is luxury first. But abhi karna difficult hai. So some of those things, but I think fundamentally startups are about people. People are about risk, confidence, ambition, relentlessness. And if you can do that, you'll win in most things in life.
What's your take on the bootstrap startups versus funded startups?
Some startups don't require funding. So if you can't grow because of funding and your model is such that extra capital will not move the needle. If you're a manufacturing facility in chemicals, right? Extra capital means setting up another factory. Does not give you access to greater customer base, right? But if you're a Swiggy, Zomato, urban company, extra capital means it gives you access to more customers with the same asset. आपने एक बार प्रोडक्ट बना लिया, एक बार सर्विस बना ली, एक बार टेक्नोलॉजी बना ली, you service everybody else basis that core, and the extra capital helps you grow. It's not a asset generation machine. So people have to realize what kind of company. If you're building a services company, then you don't need necessarily, if you need money to hire more people, that's not good use of money. It's a good use of bootstrap money, but not great use of capital that is venture funded. Venture capital funded companies, what do? They use money for a couple of things. Like, understand money is a replacement for resource. Money gives you resource. Resource is multiform. Resource can be time, resource can be people, human capital, it can be assets, it can be other sort of software. So अगर मेरे को, if I raise like a 1 crore, right, where do I put it? I end up putting it in hiring some people, in running ads, which is utilized for growth, and I utilize it to ensure that I have better processes, more freedom to experiment. I keep some money to experiment, and all of these are things that contribute to my success, right? So if you don't need the money because you're, as a bootstrap company or as a services company, you get revenue day zero, which is profitable, which means you already had the money to hire. You can't disproportionately grow because of the money. But in a network effects business, in brand, sometimes you need money. Sometimes you need money to, I don't know, get working capital can be structured by a debt also. But you want to go brand, you want to grow different kinds of things. Realize that people also don't consider this, right? People who raise venture capital money, they're not necessarily happy about it because it's the highest form of equity that you're giving away. You're giving a part of your own company. So it's coming from something, right? It's coming from you sacrificing a significant portion of your own company. So you would only do it if you really need that kind of money. So $50 million when a company is raising, it's just difficult to raise debt on it because of a certain type of business model. So long story short, if your business model needs money that is venture fundable, then go for venture funding. But if your business model does not need funding, then you have to be bootstrapped. That's the nature of capital raising. Certain kinds of capital fund certain types of companies. If you're a services company, if you're a asset heavy company, if you're non-tech, then you probably don't need the money to actually grow from a venture capital lens. But if you're a tech-led company, you need money to grow disproportionately, then you have to raise funds. That's just the law of capital raising. Like, again, people don't realize this. And if you have, by the way, your own money, put it in your business, right? Then don't, like, even if you need the money, then don't take venture funding because that is, again, the costliest form of capital that you can possibly raise. It's not the easiest form. People actually think raising money is easy. Yeah, it could be because money is available, but it's still giving up a large part of your own company, right? Like, I think there was this LinkedIn post which was viral, right? It took Haldiram, I think, some 90 years to build a $10 billion company. It took Zomato 15 years. But also, of course, Zomato founders only have 10% of the company. Haldiram founders have 100% of the company. So time constraint हुआ and equity be constrained to be. But you got there faster. You have to shrink time. You can, of course, without money also grow, but it'll take more time, more resource, you'll be slower. And in some markets, the competition, where the competition raise money, then just by a factor of market dynamics, you should also raise money purely because it's good sense too, but because otherwise somebody else with more money can always eat you.
Time and equity, both trade-offs.
Time, money, yes, time, equity are the biggest trade-offs.
And how do you evaluate a business or an idea that has compounding value?
You need to understand what is the value of that compounding, right? Like, so in a food delivery business, it's a monopoly business, which means if it compounds well enough, it will win. In a brand, right, it may not be necessarily a winner take all market. There'll be a largest, but there's an HUL, there's a Godrej, there's a Marico, there's an ITC. There's so many large companies within the landscape of consumer. So you have to calibrate within specific categories also if it's a winner take market or not. But compounding, most businesses are compounded nature, I think. How fast you compound is a factor of whether or not you have money, in my opinion. Like, you can grow 20% year on year, and the first 5 years will feel slow. But if you go 20% year on year for 20 years, it will fundamentally win, right? So you have to know how much time do you want to give to it and how fast are you compounding. Startups which are good will compound at immense speeds. They're growing 100% year on year for the first couple of years and then steady growth. But most of these businesses are compounding businesses.
Can you throw some light on Syndicate investing and
Sure.
your portfolio companies and how has that been for you?
It's been great. I think I worked at AngelList India, which gave me an immense sort of ringside view to how syndicates are run. AngelList India is this platform that is for startup investing. Think Zerodha, but for private investing. I joined as the fifth, sixth person there, and that was transformational for me to understand what syndicates are. What are they? They are temporary vehicles for deal by deal investing. So if I have a fund, I have 100 crores, I deploy 2 crores, 50 companies, that's all. But in syndicate investing, I deploy as I go, deal by deal. So for one company, I have to raise 2 crores, and for every company that I want to invest in, I raise money as I go. Those are syndicates. Now we've done about 40 of these, we've deployed about 50 crores. Now, in that, we've actually been super glad to back some really good founders. So, we backed a company called Asaya, which is in personal care. It started by the ex Paperboat founder. So, in that framework of founder market fit, consumer founder understands the space really well. Consumer space, not built in personal care, but strong insights, which is the other thing. Ambitious, wants to do great work, can build teams. So, fits my entire framework of what a great founder is. Good market, we took a fundamental bet, right? That's doing really well. Since we invested, they've grown like 25 times and they are doing incredibly well. Still early days, but I think that's one company worth mentioning. We invested in an AI company, which was a software first company 2 years back. But since in the post AI world, every software company is native AI. They now since then pivoted. This is a dropout founder who's 24 years old, and he's done an incredible job at pivoting to AI agents for primary research companies in the US. Hustled his way, got another customer base, realized what works for them, and now is building in a really, really good space. They've raised an extra round now at a 7x when we entered. We invested in a climate tech company. They've done incredibly well. That's the best performing company that we've done. And many such. I mean, in consumer, we've done some brands that people might be aware about. Pant Project is one. Kava is one. First Coffee is one. Those are more newer in nature. We've done some more traditional B2B marketplace companies as well. I invested in a sustainable packaging company that does B2B packaging. It's called Fib Mold, and they have done incredibly well too. Since then, the founders setting up a manufacturing unit now, and they raised an extra round as well. So it's a mix. The idea was that in private markets, what matters is that you need to access information which is unique to you. That's not the same in public markets. What do I mean? Let's say you and I are sitting, I can both access SBI's financial reports, annual reports, management commentary. We have access to the same information. How you extrapolate from that and if you feel SBI is a good stock or a bad stock is different to you versus it is to. However, if we are in the private markets in our example, if I know of a great founder and you don't, I will automatically win, which means access matters. We both don't have the access to the same information. I have unique access because of the podcast, because of AngelList. Both of those combined gives me unique right to win to great companies. So I have talent, I have to talk to them, I have to evaluate them, then I have to have speed, which is that I have access to information, then I have to underwrite. If I underwrite well and then I pick well, then the founder has to choose me. What does that mean? That's unique actually. If I want to buy SBI stock, if I want to buy HDFC stock, I'm going to buy it, right? But if I want to invest in a startup founder, they may not want me. Why? Because great founders will always have access to capital. Meaning that, let's say somebody like the paperboard guy, right? Like he could have taken capital from many people and he did. Why will he take money from me? What is the unique? I have to discover him. I have to know he's building a good company. Then I have to invest in him, but he also has to take money from me. And that is again your right to win. And that is where also, by the way, AngelList helps because that adds credibility to me. And the podcast helps because maybe he's discovered my podcast, whatnot, right? So these are the nuances of a syndicate versus a fund. In a fund, I have a blind pool. In a syndicate, I invest deal by deal. That's the one line.
I mean, we've seen you show up consistently for startups. Not just sharing knowledge, but you open the right doors for them. That's incredible what you do. It speaks volumes about you as a person, juggling between syndicate investing, podcasting, being a mentor in Masters Union, and working out and balancing your mental health. How are you doing it all?
The honest truth is, I got really lucky. I mean, even I like to consider that I'm ambitious and I thought I'll do well. But what I was thinking I'll do at 20, when I'm 26 is not what I have the privilege to do. It's way more than what I thought I would be doing. So if I've gotten lucky, it's a pure privilege to get to do what I do. I have immense joy. Everything, I think finding what you love and doing it on a day to day basis is the biggest privilege in life. I love my podcast. I love investing. I love talking to founders, and I get to do it on a day to day basis. Both investing and podcasting are very rewarding. And when you are, and that gives me the pleasure of operating from abundance. I'm always joyful, almost always, right? Because things are going well. I'm doing what I love. I'm surrounded by great people. If that's the case, nothing feels like extra. And I really think that's the, I think Sam Altman and like more famous people have put it well. Like find something that feels like play to you, then feels like work to others. Like to others, recording a conversation, research, putting in the effort to guess, call somebody, coordination can feel like work. For them, attending like a networking dinner can feel like work for investing. But for me, it just feels amazing because I derive a lot of joy from it. And you could derive joy from investment banking, writing financial reports, following the global markets, and that could be your mojo. But I think if you fundamentally find something you really enjoy doing, you will never get tired. And if you never get tired, you will always be joyful. You're always joyful. You'll always want to do more. And it's just a great loop. So I think I got really lucky, and I think I'm trying to like keep at it by doing more of it. So anything that is more actually feels only great, not draining. So I enjoy it a lot. That's actually people don't realize it. I mean, the goals that we often set for us is very artificial and driven by society, right? Like it feels fancy to sort of have 1,000 crores, but you probably do good at 100 as well, right? It feels fancy to have a unicorn, but the hustle that it needs, the trade-offs, the sacrifice that it needs, we don't like sort of know, and we may not be ready for. But I think one truth which is universal is irrespective of what you're doing in life, if you are doing something that you enjoy, you'll be happy in a rounded way, which is very necessary. So think about that.
Truly embracing the journey.
Yeah. I think I got really lucky. That's the core of it.
If you had to give one advice to the viewers, the new age entrepreneurs, what's that one trait in founders that beats hustle every single time?
I think hustle is sort of overrated to say that I really this discipline over motivation is another great line. When you know you want to like get to sort of the top, don't rely on your mood to govern whether or not you want to do something. Something you just have to do. And that's discipline. If you rely on your mood a lot, you probably hustle in times when you have motivation and you'll stop when you don't have motivation. But you can't rely on motivation. You have to some things. So once you've found what you're looking for, I think rely on discipline. But till then, just hustle so that you understand whether or not it's meant for you.
I think what you really love to do, you jump out of the bed every single day
Yeah.
to work on it.
Correct. And so, wait, you have to initially hustle and then be driven by. Like, people don't get this. Like, they think hustle will take you till a point. After that, it's discipline. After that, you just show up. People who show up, it's not because they're hustling, because they know showing up is just necessary. And that is what will get them to the top. So, that is, long story short, there is like hustle enough to know what you want. But once you figured out what you want, rely on discipline, not hustle, because discipline will take you farther then. Because in times of like demotivation, what do you do then?
Great. I think it was a masterclass in itself. It was a super insightful session. Thanks for everything again, Jivraj. Thanks for coming here. And I was super excited and I loved this entire session.
Super glad. Thank you so much, Muskan, for having me. You're doing a great job, and I wish you all the best always.
Thank you. Thank you so much.
Cheers.